These are 8 top big cap stocks with large percentage gains today. While watching bullish price actions, let us inform you. Our review on NTHI. NeOnc Technology Holdings Ltd is a small biopharma company working on some pretty serious stuff. They're developing new ways to treat brain cancers, which are notoriously hard to reach and even harder to treat. Their big focus is on using intranasal delivery, basically through the nose, to get therapies directly into the brain. Their 2 lead candidates, NEO100 and NEO212, are designed to do just that, bypassing the blood-brain barrier and going straight after tough tumors. Now, their stock popped almost 37% today, and honestly, it makes sense when you look at what just happened. First off, they raised about $1.6 million through a stock sale. Not a massive amount, but enough to give them some breathing room and keep their development efforts moving. But the real spark came from a new partnership with CBCC Global Research. They're teaming up to expand clinical trials into India, and this is a big move. CBCC gives them access to 30 FDA-compliant sites over there, which means they can speed up enrollment and get data faster. That's huge for a company at this stage. Clinical trials are usually slow and expensive, so expanding capacity like this is a smart way to gain momentum without burning too much time or cash. It shows they're not just sitting on promising science, they're actively pushing to bring these treatments to patients. So yeah, today's stock surge definitely has a little hype behind it, but there's also some real progress here. It's still an early stage play, so there's risk, no question, but investors saw a meaningful step forward and they're reacting to it. Our review on CGTL. Creative Global Technology Holdings Ltd is a holding company that focuses on the recycled and refurbished electronic space. They mostly operate as a wholesaler, moving everything from used laptops and phones to electronic accessories, and they also do some online retail and even rental services. Basically, they're riding the wave of the growing demand for affordable tech and sustainability-driven recycling. Now, the stock shot up nearly 29% today, and while there's no major headline driving the move, this kind of price action usually points to one of 2 things. Either traders are piling in on momentum, or there's some buzz building under the surface, like anticipation of a new deal, strong upcoming earnings, or even just sector-wide interest. This company sits in a pretty interesting niche, with refurbished electronics becoming more mainstream, especially in emerging markets and among cost-conscious consumers. Investors are likely seeing upside potential if Creative Global starts scaling operations more efficiently or tapping into new sales channels. That said, with a move this big and no official news, it's worth keeping an eye on how the stock settles. Sometimes these surges fade fast, especially with smaller cap names. But if we start seeing more volume, maybe a new customer deal or expansion announcement, it could be the start of a longer trend. So for now, today's pop feels speculative, but it's not without a narrative. There's definitely room for growth in the second-hand electronics market, and Creative Global seems to be positioning itself right in the middle of that shift. Our review on OPOF. Old Point Financial Corporation is a Virginia-based financial holding company that operates through Old Point National Bank and Old Point Trust and Financial Services. They've got a strong local presence in the Hampton Roads region, offering everything from personal and business banking to mortgage lending, insurance, wealth management, and trust services. Basically, it's your full-service hometown bank with a legacy feel and deep community roots. Now, the big news today, Old Point just got scooped up. Townbank, a larger regional player, announced it's acquiring Old Point and its banking arm in a deal worth about $203 million. And investors wasted no time reacting to that. Old Point shares jumped 23% on the news. So here's the breakdown. Shareholders of Old Point will get either $41 in cash or a little over 1 share of Townbank stock for each Old Point share they own. The structure gives them some flexibility, but overall it's a premium buyout. That $41 cash offer alone is well above where the stock was trading before the announcement. hence the sharp spike. For Old Point investors, this is a pretty clean win. It rewards long-term holders with a solid exit and gives them the option to roll into a bigger bank if they want continued exposure. From Town Bank's side, this helps strengthen their position in the Hampton Roads area, especially coming off their recent Village Bank acquisition. They're stacking up local deposits and expanding their footprint in a smart, strategic way. Bottom line, this isn't just a stock pop-off hype, it's a real business combination that brings clear value to both sides. And judging by the market reaction, investors are clearly on board. Our review on ASPS, Altisource Portfolio Solutions SA, a Luxembourg-based company, is one of those behind-the-scenes operators in the real estate and mortgage world. They don't just dabble, they provide full-stack services ranging from portfolio management to tech-driven mortgage and servicing solutions. Basically, they're helping lenders, investors, and servicers run things smoother, cheaper, and smarter, whether that's managing a portfolio of properties or streamlining loan originations. The stock jumped over 16% today, and there's a pretty clear reason why: big insider buying. Both the CFO Michelle Esterman and CEO William Shepro each scooped up over 210,000 shares. That's a serious signal of confidence, and Wall Street tends to perk up when execs start putting real skin in the game. It's not just lip service, they're putting their own money on the line, and that always gets people talking. This comes right after a solid Q4 and full year 2024. Service revenue was up 10%, and they cut debt by over $60 million thanks to a smart refinancing deal. Even with a tough market for foreclosures and originations, they grew the servicer and real estate segment by 11% and origination by 6%. Looking ahead, they're guiding for 16% revenue growth and an 18% bump in EBITDA for 2025. So between cleaner financials, stronger projections, and execs doubling down on the stock, it's no surprise investors are taking notice. Our review on LZMH. LZ Technology Holdings Ltd is a company that blends tech with real-world utility in a pretty interesting way. They've got their hands in 3 buckets: smart community systems, think high-tech building access and security through SaaS platforms, out-of-home advertising through those same systems, and a local life segment that helps connect nearby businesses to consumers through digital promotions and services. The stock popped 16% today, and while there wasn't one flashy headline driving the move, this kind of jump usually hints that the market's starting to pay closer attention to the story here. It could be growing interest in the company's integrated model, because they're not just building software, they're monetizing it through ad placements and local commerce. That's a compelling flywheel if it gains traction. There's also been a general uptick in investor appetite lately for smaller cap tech names tied to China's consumer and services rebound, and LZ fits neatly into that theme. With their smart access control devices placed across communities, they've essentially built a real-world ad network, and that's not something you see every day. So while we haven't seen a specific catalyst, this could be one of those early re-ratings, where investors are betting on the long-term potential of LZ's model to scale and generate real revenue across multiple channels. Keep an eye out. These are the kinds of names that often fly under the radar until they don't. Our review on SKBL. Skyline Builders Group Holding Ltd is a civil engineering focused company that's involved in all the gritty but essential parts of infrastructure work. Things like sidewalks, drainage, pipeline systems, site prep, demolition, and even planting and irrigation. Basically, they handle the kind of behind-the-scenes work that keeps cities functioning and construction projects moving. The stock jumped 15% today, and while there hasn't been any big press release or headline driving it, this kind of move usually signals that investors are starting to warm up to the fundamentals, or at least the potential. It could be that Skyline's core business is quietly gaining momentum as infrastructure spending picks up, especially with governments around the world pushing forward on public works and urban development. Also, when you're in a sector like this, civil engineering and construction, You don't always need flashy tech to get investor interest. Solid contracts, a growing backlog, or even whispers of new regional projects can spark this kind of move. There's a lot of money flowing into infrastructure lately, and Skyline's role in site prep and essential groundwork might be catching the market's eye. So while there's no obvious news, the 15% pop could be a sign that folks are starting to position early, maybe expecting bigger developments ahead. Definitely a name to watch if you're tracking infrastructure or construction plays. Our review on EJH. eHome Household Service Holdings Ltd is a China-based company that's all about bringing household services into the digital age. Whether it's home repairs, deep cleaning, nanny help, or even senior care with wearable tech, they run it all through their app and call center. Think of it as a tech-driven, one-stop shop for everyday services at home. The stock popped 13% today, and while there wasn't a headline-grabbing announcement, this kind of move usually hints that something's bubbling under the surface. For a company like eHome, momentum can shift quickly, especially if there's growing demand for home-based or elderly care services, which is a huge market in China right now. Their senior care segment, in particular, has a lot of long-term potential with that eWatch product. It's not just monitoring, it's peace of mind, and that's becoming more valuable as the population ages. There's also been talk in the broader market about a potential rebound in consumer services and tech-enabled platforms in China, which could be fueling some renewed investor interest. eHome is still flying a bit under the radar, but a jump like this suggests investors are starting to take a closer look, maybe pricing in optimism around demand picking up or tech adoption in the sector accelerating. Could be early days in a broader uptrend if the company keeps showing signs of traction. Definitely one to watch if you're into tech meets services stories. Our review on FLX. BingEx Ltd is a holding company behind FlashX, a courier service in China that leans into the fast, on-demand delivery space. Whether it's a last-minute birthday cake, fresh flowers, or urgent business documents, they've built a platform around one-to-one, ultra-fast delivery with their dedicated flash riders. Today, the stock jumped 11%, and while there's no flashy news out just yet, that kind of move usually points to rising investor interest, possibly off improving sentiment in the broader logistics and consumer services sector in China. With more people relying on instant gratification and same-hour delivery, BingEx is sitting right at that intersection of convenience and tech-enabled efficiency. There's also a growing recognition that the courier game isn't just about scale anymore, it's about personalization and reliability. That's where BingEx has carved out a niche. And with domestic demand picking up as consumer activity rebounds post-pandemic pressures, it's not surprising to see the market give them a bit of a lift. If momentum keeps up or we see a formal update on expansion, partnerships, or tech improvements, this name could start gaining more traction. Definitely worth keeping on your radar if you're watching the evolution of last-mile logistics in China. Please subscribe, give the video a like, and watch more from our playlist. Thanks.